This week, global markets were driven by two major themes: the potential end of the longest U.S. government shutdown in history and shifting capital flows across Asian equity markets. Let's begin with the United States. Market sentiment turned sharply positive as news emerged that the historic government shutdown may soon come to an end. Investors welcomed the reduced fiscal risk, triggering a strong rebound in equities. On Wednesday, November 12th, the Dow Jones Industrial Average closed above 48,000 points for the first time in history, marking a significant milestone and highlighting renewed risk appetite. However, concerns remain beneath the surface. Technology valuations are still elevated, and we are seeing a clear rotation from high-growth tech stocks into more traditional value and old economy sectors. This shift suggests that some investors are reducing exposure to growth stocks. If upcoming economic data or corporate earnings fail to support current valuations, the U.S. market could face renewed downward pressure. Overall, U.S. equities are now in a rebound but high-level consolidation phase, and participants should remain cautious, especially in tech and growth sectors. Moving to South Korea. Reports indicate that over $10 billion of foreign capital has flowed out of Asian markets since early November. This outflow has put noticeable pressure on the Kospi. Weakening foreign investor momentum brings both liquidity risks and valuation risks. Although Korea's semiconductor and tech industries have strong fundamentals, short-term volatility may stay elevated as long as foreign capital remains cautious. That's just Japan. The Japanese market is experiencing a rotation similar to global trends, with money moving from growth and tech stocks toward exporters and traditional manufacturing sectors. Investors are seeking more attractive valuations amid global uncertainty. Still, Japan faces the same challenges as its regional peers: high global market valuations and weakening foreign inflows. In summary, Japan has short-term rebound potential, but medium-term performance will depend heavily on export demand and developments in the global tech supply chain. Finally, let's look at Taiwan. Taiwan's market is closely tied to the tech cycle, and like Korea and Japan, it is affected by foreign capital movements. With foreign investors pulling money out of Asia as a whole, Taiwan faces similar pressure. While the short-term outlook still offers opportunities, especially for semiconductor-related sectors, the market remains sensitive to any fluctuations in global tech demand. In the medium term, external capital flows and the global semiconductor cycle will be key drivers.